The next awesome opportunity is going to be when gold and silver pull back and we have a bit of a recession. And that is going to be like a really great opportunity to get into precious metals again, hopefully in 2025. And after we do that, it's going to be something similar to this. We're going to see the market shake out, and then we have a multi-year rally in gold and silver, and we're going to see the same thing. So gold might pull back, and then we're going to see a huge multi-month run rally in gold, 3,500, 5,500. Once we have a market correction, I believe silver will probably be like $50 and $80 and potentially higher, much higher.
Gold has extended its bullish trend, achieving a third consecutive weekly gain and reaching $2,743.33. This rise is driven by its appeal as a safe haven asset amid escalating geopolitical tensions in the Middle East and increasing uncertainty around the upcoming U.S. election. Despite a strong dollar and rising yields, gold has maintained a significant 32% year-to-date increase, showcasing its resilience during turbulent times. Market analyst Chris Vermeulen believes gold's current momentum could push prices slightly higher in the short term, though he suggests the most substantial gains may already be behind us. He highlights that a potential pullback, likely in 2025 amid a possible recession, could offer a strategic entry point for long-term investors. Recently, sentiment around gold's near-term performance has cooled. The latest Kitco News weekly gold survey showed a decline in bullish sentiment among industry experts and retail traders, with both groups now holding nearly identical views on gold's upcoming price direction. Vermeulen emphasizes that this anticipated correction could lead to a robust multi-year rally, potentially pushing gold prices as high as $3,500 to $5,500. Kitco senior analyst Jim Wyckoff supports this outlook, noting that both fundamental and technical factors continue to back gold's price. He underscores that the metal's steady rise is reinforced by safe haven demand, which provides a solid price floor. Vermeulen also points out that gold's momentum often signals a shift away from riskier assets in response to global economic concerns, a trend last observed during the 2008 financial crisis. During such periods, both the US dollar and gold tend to strengthen, solidifying gold's role as a secure investment. This latest rally saw gold reach a new high of $2,758.53 earlier in the week, defying traditional market correlations with rising yields and a stronger dollar. Despite the US dollar index climbing to 104.24, marking its fourth consecutive week of gains, gold has retained its momentum, underscoring its enduring strength as both an investment and a hedge against market instability. For ongoing expert analysis, subscribe and turn on notifications so you don't miss any future updates. Your support is greatly appreciated.
I think gold, I really like gold as a barometer of what's going on with major markets. And if we take a look at the monthly chart of gold, we can use a simple tool called Fibonacci extension. This tells you the momentum from a previous move, if that move continues, where it should go. And if we were to really go from where the bottom was of the beginning of the previous super cycle back in 2001, 2002 area here, and we go all the way up to the high. So this measures the momentum of that rally. And then we bring it down to this low in 2015. If we carry that forward, I use two measured levels on here. I use the 618 level and I use the 100%. And I use this for any asset class, not just gold. This works really well for everything on any time frame. Fibonacci to me is one of the most powerful tools. But based on this rally up, the strength of this pullback, the general rule is if price comes up to the 618 level, which is a 61% rally of the previous rally, and it takes a pause, then we're usually going to go up and hit that 100% measured move. That's what one stands for. This rally up is equivalent to this initial rally. And so this is a pattern that started obviously 13 or 20 years ago. This is a huge pattern. We can even draw another one from this low to this high and this low, and it actually comes out to the same spot. So we have multiple massive cycles and Fibonacci levels coming out to this price. And what is really interesting here is when we look at how gold performs at certain stages. So we've had this multi-year pause, and during this pause is when stocks have skyrocketed. This was right after COVID. Nobody really wanted to go into gold. We actually saw a rally up into COVID because the world was starting to get very nervous of what's going on. But overall, stocks took off and gold fell to the sidelines. Nobody wanted it. And then suddenly now we've been seeing gold rip higher. And there's all kinds, we got bubbles in stocks and real estate, all of these things over the past year and a half. And so investors around the world are getting nervous. I like to look at gold as kind of like planet Earth is like the hive mentality. When gold moves, it's the whole planet, people trying to get away from risk. So they get away from stocks, real estate, currencies are all over the place. And so when gold starts to take off and outperforms the stock market, this is a big warning sign. And we've seen the same thing in the past. We saw gold start in a major super cycle back in 2003, 2004, it broke out. We saw a multi-year pause and stocks ripped higher during the 2006, 2007. And then out of nowhere, we just saw gold start to take off. And this goes right into the peak of the stock market in 2008. And that's because people were getting nervous. We had bubbles in stocks, real estate, currencies were all over the place. And then gold pulled back about 34% from there. So this run up that we see here, this global fear, is the same run up we're seeing right now. We're also seeing the US dollar index rally with gold. And when the dollar rallies, that usually means there's global concern as well. The dollar tends to perform very well. So there's a few things at play here. Big picture, we're kind of at the peak for gold. It might want to rally higher just because it has a lot of momentum. But overall, the easy kind of measured move is done for gold right now. And so the next awesome opportunity is going to be when gold and silver pull back and we have a bit of a recession. And that is going to be like a really great opportunity to get into precious metals again, hopefully in 2025. And after we do that, it's going to be something similar to this. We're going to see the market shake out, and then we have a multi-year rally in gold, in silver, and we're going to see the same thing. So gold may pull back, and then we're going to see a huge multi-month run rally in gold, 3,500, 5,500, whatever that top will be for gold. So this is all really good. It's nice to see gold unfolding like it should. At key critical levels, it means we should see a little bit of weakness, which is what I kind of want as a precious metal investor. I'd like to see a pullback, and then it'll be an opportunity to get in before the next major run. So
the silver market, though still riding a strong bullish trend, is beginning to show signs of exhaustion. Analysts suggest that any substantial pullback could be an opportunity for investors to enter the market, albeit cautiously, given silver's inherent volatility. Careful position sizing is recommended to help manage risks associated with potential price swings. Market expert Chris Vermeulen foresees a temporary pause in silver's uptrend in the coming months, with a likely buying opportunity emerging as a broader market correction unfolds. He believes silver could rally to $50 or even as high as $80 during a robust rally phase. However, he emphasizes the importance of patience and precise timing due to silver's unpredictable price movements. Recently, silver's 6% surge to surpass $33.60 per ounce has added intrigue to the market, especially as this rally now presents a financial challenge for 5 major U.S. banks with significant short positions. This unexpected spike underscores silver's capacity for rapid gains and high volatility, factors that investors should weigh carefully in their future strategies. Now, let's return to the interview.
Silver did a lot of what gold did. It had a multi-year pause, and then people piled into silver just before the 2008 crisis, and silver had a big pullback. If we use Fibonacci extension from where we are right now, we can kind of take a couple different levels through here, and it gives us kind of an upside target. So based on that same type of analysis, we have the rally up, we have the pullback, and we've come to the 618 level, which we've had that pause, and now we're going up, and 35, 36 is kind of the peak. If we just draw a line across this level, you can see it's also these significant levels on this chart in the past. So if we just zoom in a little bit, you can see here, this is going to act as resistance, another significant top. We had a couple months where it kind of hit that level. We had it actually above that price and found support for a bounce. So I don't think there's a whole lot more upside again in silver. 50 would be a pretty significant run. That will be, to me, like some blow off phase, and it'll probably be given back very quickly because that's going to be an explosive parabolic move. And usually what goes straight up is going to come straight back down. To me, that $36, 35, 36 is kind of the upper level just based on momentum, based on where gold is. As you know, silver is kind of the wild card, though. It can just pop and take off. It can also drop like a rock. So silver is the definitely more speculative, more volatile play. But again, they're both right now in an uptrend. They're both lurking up near resistance. And so people just need to be aware. I don't see there being huge upside potential from here. I think just knowing we're in this pattern and that there's going to be some type of pause for several months, and it'll be an opportunity to, I think, invest back into precious metals and catch that next leg up. Because I think once we have a market correction, I believe silver will probably be like $50 and $80 and potentially higher, much higher. So there's a lot of potential, but it will probably be pretty volatile. In 2008, we saw silver, it ended up correcting, 60 something percent in that correction. So there's a lot of volatility. And to me, there's more downside risk right now than upside. But the downside is the opportunity. It's knowing it's coming. It's knowing that there's going to be a place to get back into the precious metal space. I think a lot of people are probably like thinking over here. They're thinking we've already had the correction. And I can see that, you got this pullback in this move. We've had this pullback in this move. But based on super cycles and where one ends and a new one has started, I'm a notch before. I'm back here at this peak here where we're going to go through some type of pullback in silver before it really, goes parabolic and takes off. So it'll be interesting to see how that unfolds. Of course, if there's a black swan event, it could spark oil, could spark precious metals to take off. But to me, this pattern, this very strong pattern is playing out. I believe, we're going to see more so of a pause and pullback first before we go into that $50, $80 silver.
In the face of global economic uncertainties and shifting market dynamics, gold and silver have proven to be strong hedges against instability. Rising yields and a stronger dollar continue to challenge gold's resilience, yet its appeal as a safe haven remains solid. Silver, too, has surged recently, demonstrating its potential for rapid gains, though its volatility calls for strategic timing. For long-term investors, both metals offer unique opportunities for diversification and protection from market turbulence. With analysts anticipating potential price corrections, attractive entry points may soon emerge. What factors do you think will most shape the future performance of gold and silver, especially amid global economic shifts? Share your perspective in the comments. If this video resonates with you, join our community by subscribing and hitting the bell icon for updates. Thank you for being a valued part of our community.